Good evening. Thanks for joining us on India Business Hour. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Crude oil prices rise for the fourth straight day after OPEC nations agree to slash output by 2 million barrels a day, the largest reduction since 2020. Brent crude prices at the highest level in nearly a month. The US slams OPEC nations, calling the decision short-sighted. Bulls continue to reclaim lost ground on the Lal Street. The Sensex and the Nifty gain for the second straight session, but profit booking in late trade wipes out some gains. The rupee weakens against the dollar as it moves closer to the 82 mark. The World Bank downgrades India's GDP growth forecast for the year to 6.5% from 7.5% earlier. Also expects inflation to remain above 7%, but adds that business confidence remains positive and India is better positioned than most of its peers and neighbours. The Indian government launches a probe after the World Health Organization says 4 cold and cough syrups made by Haryana-based Maiden Pharma could have potentially caused the death of 66 children in Gambia. India's drug regulators collected samples of the syrup and results are expected in a few days. Shares of SpiceJet rally in trade after the government enhances the emergency credit limit for the aviation sector to 1,500 crore rupees. The scheme has been extended till March 2023. Akasa airline is satisfied with its performance in the first 60 days since its inception, says its management load factors are improving even though demand is still not at pre-COVID levels. The airline also plans to allow domesticated dogs and cats on board from November. Air quality in the national capital region turns poor and the graded response action plan kicks in. Major construction and demolition activity not registered with authorities, banned with immediate effect, but there is no blanket ban on all construction. Elon Musk and Twitter still finalizing the contours of a potential $44 billion deal. Musk recently revived his takeover plans as Twitter can become a super app like WeChat in China. At least 35 people are dead after a gunman storms a daycare center in Thailand. 22 children among those killed. The gunman was a former police officer who reportedly drove back home, killed his wife and child before shooting himself dead. And Congress President Sonia Gandhi joins Rahul Gandhi and other leaders on day 27 of his nationwide march at Karnataka's Mandya district. Let's start with the market action where the bulls continue to reclaim lost ground today. The Sensex and the Nifty gaining for the second day, but some gains were lost due to profit booking in late trade. So the Sensex gained over 150 points. The Nifty gained nearly 60 points. Mid-caps fared better today than the blue chips, with the mid-cap index gaining nearly 400 points, so closing in the green. That's the market for the day. The Indian rupee weakened against the dollar again. Strong dollar has been rattling currencies across the world. $1 US is now worth almost 82 rupees. Despite the recent depreciation, the rupee has fared relatively better compared to its peers. But the big story that is moving markets across the globe, crude oil prices have risen to their highest level in nearly a month after rising for the fourth day in a row. Now, in a bid to prop up prices, the world's top oil-producing nations and Russia have agreed to cut production by 2 million barrels a day. This will be the largest output cut since 2020. The US has slammed the decision, with the White House terming it short-sighted. Steve Sedgwick gets us up to speed with the latest. Steve.
OPEC Plus, which has agreed to slash oil production by 2 million barrels per day. It marks the group's biggest output cut since the pandemic and is set to push crude prices higher in an already tight market. OPEC Plus said the move was motivated by rising interest rates and a weaker global economic outlook. The OPEC Plus output cut drew the ire, yes, you'd expect it, from politicians, especially in the US, where there's an election coming up, which described the decision as short-sighted. President Biden directed the country to release 10 million barrels from its strategic petroleum reserve in the hope of keeping prices at the pump down, to deprive Russia of oil revenue as well. The decision cast OPEC members' relations with Russia into the spotlight at a time when the US and the EU are set to impose a price cap on Russian oil exports. The White House press secretary, Karine Jean-Pierre, said the move to cut production and raise prices showed that OPEC countries are siding with Russia.
OPEC's decision to cut production's quotas is short-sighted while the global economy is dealing with the continued negative impact of Putin's invasion of Ukraine. It's clear that OPEC Plus is aligning with Russia with today's announcement, and I'll leave it as that.
Well, reactions they're coming into OPEC's decision to cut oil production. Now, the World Bank has downgraded its forecast for India's GDP growth from 7.5% in June to 6.5%. The World Bank believes the deteriorating international environment will have an impact on India's economic growth as well. However, in its report, the World Bank has also said that India's exports and services sector have recovered more strongly and that business confidence remains positive. The chief economist of the World Bank for South Asia spoke exclusively to CNBC-TV18 on the reasons behind the downgrade and India's growth prospects going forward. Take a look.
India has the same problem with the rising commodity prices, rising input prices, and also the tightening of the global financial markets and weaker demand abroad. As a result of that, we expect that the second half of this calendar year will be relatively weak. The weak demand in the rest of the world doesn't help India, and that puts downward pressure on exports. At the same time, over the last 2 years, since the start of COVID-19, we see very strong exports in what we call the new services. The digital services in general got a boost. So a difficult story on the good side, but very positive signs on the exports of new services.
Well, that is the World Bank's economist for South Asia on the downgrade. India's services sector growth has slowed in September to a 6-month low, according to S&P Global Purchasing Managers Index. Services activity slowed in September after rising for several months. The report cites inflation as another reason for drop in demand. Many firms polled by S&P said that they are facing higher input costs for the 19th month in a row. The Indian government has launched a probe into 4 cough syrups manufactured by Haryana-based Maiden Pharma. This after the World Health Organization issued a global alert saying that the use of these 4 products could have potentially caused the death of 66 children in Gambia. The WHO says that lab analysis of samples of each of these products confirms that they contain unacceptable amounts of de-ethylene glycol and ethylene glycol as contaminants. Ekta Bhatta joins us now to take us through what the WHO has found and what the company in question says. Ekta.
The World Health Organization has issued a medical product alert indicating that 4 cough and cold syrups made by Indian-based private pharma company Maiden Pharma could be potentially linked with serious kidney injuries and deaths of 66 children in Gambia. The WHO has said it was conducting further investigation with Maiden Pharma and regulatory authorities in India. WHO has also recommended all countries detect and remove these products, though so far it has been detected only in Gambia. They could have been distributed to other countries. The Indian authorities such as the CDSCO too have acted fast and taken up the matter of Maiden Pharma immediately with concerned state regulatory authorities, and a detailed investigation is launched in collaboration with the state drug controller Haryana. The reason for these 4 cough syrups, which could have caused over 60 children dying in Gambia, is likely due to the drugs containing unacceptable amounts of the toxic substances called diethylene glycol or DEG. DEG is a solvent which is present in numerous formulations, from brake fluids to paints and chemical preparations. It is a highly toxic organic solvent that causes acute renal failure and death when ingested. DEG is not used to manufacture cough syrups, but the contamination arises mostly if the company is manufacturing the drugs uses a low-quality industrial-grade propylene glycol for the cough syrups, where DEG is one of the impurities. Hence, pharma companies need to ensure they are using propylene glycol, which is as per pharma standards, hence safe. Industrial propylene glycol contains high levels of DEG and, if substituted in pharma products, can be toxic. While there could be other factors of contamination such as an overall faulty supply chain, this is probably the most common one, especially when it comes to cough syrups. Lastly, DEG contamination are not new, with cases recorded since the late 1930s. Globally, for India, DEG contamination has been linked to 14 children dying in Chennai, 21 fatalities in Mumbai due to the drug administered containing 18.5% of DEG. In 1998, 36 children between 2 months to 6 years were affected by acute renal failure as a cough drug manufactured by a company in Gurgaon was found to have contained 17% of DEG. 33 of these children died. And as recently as 2 years ago, in 2020, 17 children were hospitalized with renal failure, and more than half died after being administered coal-best PC cough syrup, which contained over 30% of DEG.
There are multiple instances of these companies' drugs failing in India, in Gujarat, in Kerala. I don't even know where to start. The reason why we picked this particular instance, because it is probably symptomatic of the callousness, the responsibility, the complete lack of accountability of the drug regulator when it comes to our medicines drug supply. These companies would never dream of doing that to Europe and United States because they know that they have to comply with stringent regulations there. The question I guess we have to ask is that why do we encourage, allow, or why are we satisfied with two different set of standards?
We need to look at centralizing at least the licensing function for manufacturing, which means that all the licensing across the country for manufacturing facilities, which then includes inspections, et cetera, has to be done by one central authority. We still don't have a complete insight into how the system works because everything is opaque. We are treating the pharma industry with kid gloves. It's just shocking that this hasn't gotten more attention in the past.
And you can catch the full conversation with Dinesh Thakur and Prashant Reddy at 9:30 p.m. right here on CNBC-TV18. A quick look at some of the other headlines tonight. Life Insurance Corporation of India is likely to pare its stake to below 20% in IDBI Bank. Sources say both the government and LIC combined may offload about 60% stake. Expressions of interest have been invited for the bank's privatization by the 15th of October. The Delhi government has enforced the first stage of the Graded Response Action Plan after air quality in the NCR deteriorated to poor category. These measures include an immediate ban on big construction and demolition activity that is not registered with the authorities. Shares of SpiceJet rallied in trade after the government allowed airlines to borrow up to 1,500 crore rupees under the Emergency Credit Line Guarantee Scheme. Now, this is much more than the earlier limit of 400 crores. Additional funding is expected to help cash-starved airlines to tide over problems like clearing statutory dues like TDS and PF, as well as payments to lessors. Welcoming the move, SpiceJet's chairman and managing director urged the government to include ATF under GST. SpiceJet, of course, up by almost 9% on the back of that. Akasa Airline is satisfied with its performance in the first 60 days since its inception. The airline's management said demand is still not back at pre-COVID levels, but their load factor has been improving. Akasa is also planning to allow domesticated dogs and cats on board starting November.
Demand is on its high, but there is also a capacity that's a little short versus the pre-COVID levels. I think we're 10 to 12% short on the capacity side when we exited Feb 2020 versus where we are today in September or even October 2022. So that has a role to play. We are still not gone to pre-COVID levels on the demand side, but we are very happy to have witnessed 100,000 passengers or close to 1 lakh passengers in the first 7.5 weeks of operations. We have also seen an improvement in the load factors from 53-54% we are in the 80s. So clearly moving in the right direction in a very short span of time, and very happy.
The government has extended support to the aviation sector through the ECLGS scheme. Is there more that can be done, especially for younger airlines such as yourself?
A lot that can be done, but I think it's too early for us to look outwards. We want to look inwards and see what we can do for ourselves. So that's what we would focus on at this stage.
The first question I'd like to ask is one of the important announcements that you made, which is that the airline will now be pet friendly, where you're looking to host pets as well. Just more clarity on what that plan is like, when is it going to be put on the ground, and what can we expect, what can flyers expect when they're looking to fly the airline with their pets?
Yeah, so effective flights and the first flight where pet can fly will be effective 1st of November. So we'll allow pets in cabin. Pet has to be included in the cage, has to be 7 cages to carry in the cabin. But if customers want to carry pets as in the cargo compartment, that's another option. And you can take up to 32 cages, including the container as well. What can customers expect? A warm, happy, safe, travel for pets as well.
Well, that's Akasa. Now, shares of FMCG companies continue to take a hit on the back of lower sales in September. Godrej Consumers fell almost 5% today after the company said it expects mid to single-digit drop in volumes. It attributed the decline to high inventory costs, high marketing investment and weak performance in the Indonesian market. The Zee Entertainment stock soaring over 11% in intraday trade today after the CCI cleared its merger with Sony, subject to certain modifications. The combined entity will be worth around $10 billion and will create a behemoth with over 75 TV channels in its kitty. Beauty and fashion retailer Nykaa has announced its partnership with Apparel Group, the largest lifestyle retail conglomerate in the Middle East. The deal will allow Nykaa to enter the Gulf market across Bahrain, Kuwait, Oman, Qatar, Saudi Arabia and the United Arab Emirates. Mumbai police has arrested a man from Bihar in connection with the anonymous calls threatening to target Reliance Industries chairman Mukesh Ambani and family. The suspect was arrested from Bihar's Darbhanga district last night. After reviving his $44 billion deal to buy Twitter, Tesla CEO Elon Musk now wants to turn the platform into a super app called X. He said that Twitter is an accelerant to fulfill his vision of a super app. The service would be like WeChat, the Chinese super app that Musk has openly praised in the past. However, Musk hasn't given any further details. Stephen Kowat joins us now to tell us what this will mean for users. Stephen.
Musk tweeting last night his purchase of Twitter will be part of his plans for an app called X, which he says will be a, quote, everything app. So what is he talking about exactly? It's not a new concept, a so-called super app that acts as a condensed version of the internet, letting you do everything within one app. The best example of this is WeChat. It's owned by Chinese internet giant Tencent and has over 1 billion users, mostly throughout Asia. WeChat lets you send text messages, pay for things online and in stores, hail a car ride, play video games, and so much more. It's actually so popular, there was an uproar in the U.S. 2 years ago when the Trump administration tried to ban WeChat. It's the only app many Chinese Americans can use to communicate with friends and family in China. Musk telling Twitter employees in a town hall over the summer WeChat could be a model for future versions of Twitter. He sees that as a way to supercharge the platform's growth, which still has fewer than 300 million users. But Musk will face the same problem as other Silicon Valley companies trying to create the holy grail of a super app. Companies like Facebook, Uber, and even the crypto exchange FTX have all toyed with the concept. But so far, Western users prefer to use a different app for everything they want to do on their phone.
Stephen, thanks very much. That's the latest on Musk and Twitter. Coming up next, a ground report from Ukraine. Our colleague Sanjay Suri speaks to Ukrainian army personnel on the front lines of the war. That and more when we return.